the impact of government supports. So every level of government has stepped up with supports for individuals and businesses this year to help us get through this COVID nightmare that we're in at the moment. With funding announcements made, details following, then updates to programs based on feedback from Canadians. The quantity of information can be overwhelming, particularly for business owners in survival mode, just trying to see their way through recovery. Tax professionals are used to updating their skills and knowledge base, but this year has seen that proactive approach increasing tenfold. So we're very pleased that Nancy Stabback from Padgett Business Service is prepared to share her expertise with us today. So I'll introduce our expert in a moment for the presentation, after which we'll proceed to Q&A. And to submit a question, please use the Q&A button at the bottom of your screen rather than the chat within your Zoom platform. Type out your question, and then I'll get to the questions once we finish with the presentation. Also joining us today is Andy Gubbels, again, co-owner of Padgett Business Services, and he's going to be doing some technical stuff on the back end and will be available probably for questions as well. So Nancy Stabback is a local business bookkeeping, accounting, and tax professional who helps business owners navigate the challenging financial and tax compliance requirements they face. Before acquiring the Aurelia and then Barrie Padgett franchise locations, Nancy owned and operated several businesses, providing a unique perspective on the needs of her current statuses, or her current clients. So we have a pre-recorded presentation that Andy's going to introduce for us here, and then once that's done, we'll get to Q&A. So please get your questions in there. We're looking for as much as we possibly can, and hopefully we can get some answers to you. I know tax season this year for me is going to be different than any year before this, and I can imagine for small business owners it's going to be, again, one of my favorite terms. I was just talking to Nancy about a giant box of darkness, so hopefully Nancy can shed some light on it. Off we go there, Randy. Thanks.
Okay, just for everybody, just a bit of information. We're going to be showing the video of Nancy doing the presentation, and afterwards there'll be questions and answers. And take note, at the end of the presentation, there is some information about where you can go to actually download any of Nancy's information and links to all the government programs that are out there. So I'll start the video now.
Good morning, and thank you for showing up today, and welcome to a new year. 2020 has certainly been a crazy year to be in business. My name is Nancy Stabback, and my business is Padgett Business Services. The specialty of my business is bookkeeping, accounting, and tax work for small business owner-operators. I've been assisting businesses in this role for over 20 years. Today, I'd like to talk about some of the various government supports that have been created over the past year dealing with the COVID-19 crisis. Because what we do at Padgett Business Services is to focus on the needs of all of our clients who are small business owner-operators. The focus of the discussion today is the programs and supports that are targeted for this specific group. I'll provide a brief summary of several of those federal programs, plus some links to the CRA web pages for these programs, and I've also got some links for some of the provincial programs for you as well. So not every program works for small business in Canada. There are eligibility rules, revenue decline rules, baseline rules, historical activity rules. We at Padgett have spent the last 9 or 10 months learning not just how the programs work, but who they work for and why. In all of the confusion and the volume of information for these programs and rules, sometimes clients weren't even aware that funding was available for them. There's no way in a 20-minute presentation that I can go through even the highlights of these small business programs. So what I've done is I've created a couple of typical business scenarios to help illustrate some of the programs by discussing how each program would affect 3 fictional but typical small business owners. So my fictional, typical small business owners, I have 3. Marie, she owns a restaurant bar. Her business is incorporated. She has anywhere from 10 to 50 people on payroll, both full and part-time, and it depends on the season. Joe runs a plumbing business. He does work for both residential customers and commercial customers. He operates his business as a sole proprietorship. He mostly works alone, but occasionally he hires help when needed. Susan is an interior designer. She specializes in residential work. She operates her business as a corporation, and she has 2 long-term full-time employees. Okay, so the first program that I want to discuss is the Temporary Wage Subsidy Program, the TWS. And that was pretty much the first program that was rolled out by the federal government. It was launched as a 3-month program to give businesses with payroll costs a break by reducing payroll tax payments. The program ran from March 18th until June 19th, 2020. So the subsidy allowed employers to short pay an amount of payroll tax that was equal to 10% of their gross payroll during that period. It was a reasonably simple program. And of course, there's more complexities that you can read all about on the CRA website if you do need to know more. So who benefits from this program? And that would be anyone with payroll that was paid between those dates, March 18th till June 19th, 2020. It was easy to claim and calculate, and it was straight up just good support for my clients and small business owner operators. But what are the traps? So if you also qualified for the CEWS, the 75% emergency wage subsidy program that I'm going to talk about next, there's more math that you need to do as the business owner to cross-report those programs. The intent was never to be able to double dip on the 2 programs, so there is an adjustment between the 2 programs if you qualified for both. And the other part of this that you need to know is that there is a new year-end form that you'll need to complete if you took advantage of that program. It's called the PD27. There's no due date for it at the moment, but it is going to be required to reconcile payroll tax accounts at the end of the year. So how does the TWS program affect Marie and Joe and Susan? Well, Marie, the restaurant owner, she was closed for business during all that time. So her staff was laid off. She had 0 payroll during that 3-month period. So 10% of 0 is still 0, so there is no claim for Marie. Joe, our plumber, he had no employees. He's a sole proprietor, which means he's not on payroll himself. So he's another one that had no temporary wage subsidy program that he could claim. Now, Susan, our interior designer, she kept herself and her staff on payroll. They were all working on projects that didn't require needing to have their doors open to the public. So her business and her payroll carried on. Susan's total payroll costs for the period were $36,000. 10% of that is $3,600 that she qualified for in subsidy funding. So that was a significant help for her business. The big payroll program is the CEWS program, and that's the Canada Emergency Wage Subsidy Program. It did take a little while to get that one up and running. And since it was first launched, it's been updated and tweaked and modified and extended, but it has been a lifesaver for a lot of small businesses. So in brief, it started out to be a short-term assistance for employers who were down in revenues by at least 30%, and the intent was to help keep employees employed. The idea was that CRA would give money to the employers, who would then keep their employees on payroll and keep them off of that new CERB system. But the reality, though, was that there was so much confusion that was going on back then. That was at the beginning. And pretty much anybody could get CERB, and it was quick and easy to get. And a lot of employers laid their staff off so that their employees could get the money they needed and to stop the bleed of their own payroll expense while their businesses were closed. Not a lot of business owners had enough cash reserves to keep paying people while their doors were closed. They had no money coming in, and who knew how long it was going to take before the government actually had the wage subsidy funds available. So the concept of being reimbursed later was a little bit of a tough one, and CERB was readily available and a lot simpler. So a lot of people didn't keep their staff on payroll. But another issue with this set of rules for the initial program that was launched was that the business had to be down in revenues during specific periods by 30%, and it was an all or nothing approach. So what that meant is that if your business was down 29%, no funding was available. So Counting on a subsidy and then finding out that you missed out by 1% or 2%, it just wasn't fair. There were some other challenges with that early program, and those early challenges led to the tweaks and modifications and changes that I already mentioned, and now any revenue decline results in something of a subsidy. The more you're down, the higher the subsidy is kind of how it works. The program has also now been extended officially until June of 2021. So who benefits from this program? With the current revised program, anyone with employees, including themselves, who have suffered a revenue decline can apply. You need to check the CRA website for all the rules. But we have seen clients receive some substantial funds through this program, and that's allowed them to stay in business. What are the traps, though? Traps are penalties and repayments. The rules for this program are complex, and they have changed many times according to what period the claim is for. Mistakes can be costly, and there is CRA intent to audit the funding. Right now, funds are being paid out to applicants with very little verification, and the audits are going to come long after the money has been spent. So those mistakes are going to cost down the road. So what about Marie and Joe and Susan? The program's been amazing for Marie. Her restaurant operated all summer on a restricted basis. Her revenue declines allowed her to be able to fund her payroll by that maximum 75% that the early program provided for. She was able to stay in business. The new program doesn't give her as much subsidy funding now, but some money is better than no money. She still qualifies. Marie is also an employee of her own corporation, and funding is available for her own wages as well. Joe, the plumber, he did not qualify for any funding because, as we all know, the summer turned out to be the season of home renovations. Joe was actually very busy. His sales increased. He did have to hire help, but because his sales increased, he was excluded from the program. Susan, our interior designer, she qualified for the subsidy. One of the features of the CEWS program enabled employers to furlough their staff and receive funding for those individuals. And what that basically means is that if there is no work and you want to retain your staff by keeping them on their payroll, you could continue to pay them while they stayed at home with no work. And then you would receive the subsidy. So what this did is it let the employers keep their well-trained staff, potentially earning more than they would on the CERB, making your employees happier, and all the while waiting for the world to come back. So for Susan, her 2 full-time employees received the income. Susan received the government funding, and both of her employees returned to work when the work came back. So while we're on the payroll topic, I just wanted to touch on the fact that there's some new T4 reporting requirements for employers for the 2020 tax year as well. So CRA has put in place some new boxes on your employees' T4s this year. These new boxes report payroll earnings during specific time periods in 2020. Who's going to benefit from that program? That's going to be the CRA. What they're going to be able to do is flag individuals who received funds either in error or by fraud by referencing those time periods. If someone received CERB while they were also earning income, CRA will be able to come knocking. What are the traps? Not so much traps as there's going to be some extra payroll costs. There's going to be all of the extra reporting. The periods for the new T4 boxes don't line up with regular payroll periods, like by the month. So anyone that uses a payroll service is probably going to find that they're going to have to pay some extra fees to get the extra calculations done. And anybody that's doing their own is going to have some extra money in order to meet that compliance requirement. Okay, so after we're done with the payroll topic, we'll move on and talk about the CEBA loan, the Canada Emergency Business Account Loan. That's the program that has recently been expanded. It started out as a $40,000 interest-free loan with the potential for having up to $10,000 forgiven. So now there's an additional $20,000 available for qualifying businesses with an additional potential forgivable portion of another $10,000. For the extra funding, owners need to make a new application, and they also need to make an additional attestation on the negative impact that COVID-19 has had on their business. Applications are open now. Who benefits from the program? Anybody that qualifies. This is a reasonably easy loan to get, as it is a government guaranteed loan. Normal bank rules may not apply. The recipients get to use the funds until December of 2022 with no interest. And then, if all the requirements have been met, you're going to pay back $30,000 of the $40,000 loan, or $40,000 if you went on and got the additional loan for a total of a $60,000 loan. And so that's some pretty amazing support. But what are the traps? Okay, so for this program, there are several. And the first one being is the loan is going to convert to a 5% interest loan if it's not paid back on time. There's also some trickiness on what is an eligible non-deferrable expense as well. So the original loan agreements back in April when the program first launched, those original loan statements stated that, and this is a quote, that the funds could be used for without limitation, and then went on to list. The wording on that original document has now been changed. So where it said before without limitation on payroll, the new wording specifically excludes non-arm's length payroll. And what non-arm's length payroll means is owner's payroll and owner family payroll. That's considered to be non-arm's length, and it's going to be excluded from what is considered to be an eligible expense for the purposes of this program. So anyone that's considering applying for the extra $20,000 loan should be aware that that new loan agreement will replace the old one. So if you may have qualified under the original agreement by taking on the new agreement when you take on the new $20,000, it may it's going to replace that old one. So the owner and the owner family wages may not be an eligible use of those funds. Depending on the individual business, that might not be a problem at all. If the business has enough regular, non-deferrable expenses to still qualify for that forgiveness part, it's not an issue. However, if the business doesn't have enough of the eligible expenses, they may not be able to keep the full forgivable part. Be aware that the expected forgivable part does need to be included in business income in the year received. And then if later on it is determined that the business doesn't qualify for that full forgiveness amount, there will be an ability to correct that by deducting it on a future tax return. There is also a deferring election that is available for certain situations as well. The last consideration that I wanted to mention is that everyone receiving this loan did agree that they're going to participate in post-funding surveys that are going to be conducted by the Government of Canada. So with the program, this particular CEBA program, there's a new deadline to apply. It was moved a couple of times, but the deadline as of today is March 31st, 2021 in order to apply for that program. Going back, what is the impact of that program on Marie and Joe and Susan? Well, poor Joe misses out on that one as well. He didn't have payroll high enough in 2019 to qualify for the program under what was called the payroll stream, and he will not have enough eligible expenses to qualify under the eligible non-deferrable expense stream either. Marie and Susan, though, they both qualify. Marie, she's already used the original funds and she's applied for that extra $20,000. As a restaurant owner right now, she's really worried that she's not going to be able to get the $40,000 paid back by next December. And if she doesn't, she's not going to get the $20,000 for free, and she's going to have to pay back the full $60,000. Susan, however, has cash reserves. She's confident she'll be able to repay. Her expenses are high enough to cover all the qualification rules, and she knows she's going to win on that one and get to keep the forgivable part. The last program that I wanted to talk about was the rent programs. Now, we've had two of them. The first one was the CECRA, the Canada Emergency Commercial Rent Assistance, and then the next one was the Canada Emergency Rent Subsidy. That's the one that's ongoing right now. So that first program wasn't as successful as it could have been because it was a pretty awkward program. It involved the tenant needed to report their revenue declines to the landlord. The landlord had to handle all of the administration parts of the program, plus the landlord had to be willing to give up a chunk of the rent out of his own pocket. The program was dependent on the landlord's participation. So if the landlord themselves had decided that they did not want to participate, whether or not their tenants qualified for the program, the tenant had no recourse. The funds would not be available to any tenant unless the landlord took on the responsibility of the program. Now we've got the new CERS program, the Canada Emergency Rent Subsidy. It just reasonably began not that long ago. The periods available began September 27th. It did take a little while to get the program launched, but the applications are now open. So there's two parts to the program. There's a base, and then there's lockdown support. So the base is a subsidy that is based on how much the revenue decline of the tenant was. And the lockdown support part, I'm going to just read the wording that's on the CRA website right now. Lockdown support provides additional funding for qualifying organizations that are subject to a lockdown and must shut their doors or significantly restrict their activities under a public health order in response to the COVID-19 pandemic. So of course, we have that going on right now. So there's going to be a lot more people that are going to be able to take advantage of that extra program. Who benefits from the program? Both tenants and landlords with revenue decline. There is some extra funding that's available during those lockdown periods. And the easiest claim is going to be for a business that is paying simple rent with no quirks. And what are the traps of the program? Well, the funds that are received under the program is considered to be taxable income. Payments that are made to non-arm's length parties are ineligible for the program. And the program is still new enough that we don't have enough clarifications to fully understand all of the quirks of that program quite yet. So on the last page that I'm going to show on the video here is some Ontario links for some other programs. There's a couple of links. I think I've got 3 of them on there. One of them is a template that would help you as a business owner to create your COVID-19 workplace safety plan. There is a link to an Ontario program that covers some costs for PPE that you've had to purchase in order to keep your staff or your customers safe. And the last thing is there's a link to the new Ontario Small Business Support Grant that is going to be launched sometime later on this month. So that was a ton of information in a really short time. I do hope that you learned a little bit, maybe even figured out that you may qualify for some of these programs and can make some applications on your own. The money is out there to help businesses in need. The CRA websites that were listed as we went along have all the details that you'll need to get started. At Padgett, we've been watching our clients deal with all of this uncertainty, the anxiety, the frustration, and the financial stress that has been caused by COVID-19. And we really understand how to help our small business owner-operators. We're here to help. Thanks.
All right. Well, that was great. We're just we'll let the credits roll here, and then maybe get Andy to shut off the. Actually, you know what? You could probably leave that up there if you wanted to. It's up to you. Anyways, thank you very much, Nancy. That was great. And I wasn't wrong when I said it really is blocks of darkness. It's so complicated that, you know, I would imagine that any business out there that isn't using an accountant or a bookkeeper to help them through this is making a serious error. So I've got a few questions up in here, and you know, some of these questions are going to be very specific about individual businesses, so we'll try to frame them as best we can. The way that you presented the information using different types of businesses, I think, was really effective. But again, you know, we're going to wind up with a lot of individual sort of issues in here. So the first question up here is, my teenagers have been collecting the CERB. How much can I expect them to be paying back? They made more money from CERB than they would from if they were working. So this, I guess, is more of a personal tax kind of an issue, but I think it's a question that is going to impact a lot of people, to be honest with you.
Yeah, absolutely. And I think the way that I normally explain that to clients is that An income tax return at the end of the year is a reconciliation between how much did you earn and how much you're going to owe. So therefore, if you've only earned, $5,000, then you're going to have your taxes calculated in the $5,000, but it might be from 5 different sources that you earned that money. So what that means to the teenager that has been collecting the CERB is they're subject to those same rules. How much did they earn in the whole year is going to trigger how much they would have to pay back. So basic personal exemption right now, I don't even know what it is this year, but it's, maybe close enough to $12,000. It's hanging around that mark. So if the individual has received less than that basic personal exemption in the year, they're not going to owe any money. But if they got that $10,000, which had no taxes withheld, but then later on in the year, they earned income somewhere else. Maybe they made another $10,000. Where they were working, they would have only taken off, tax deductions on the 10,000 of earnings. And then what happens is then you have to stack the 10,000 they earned and then add on the 10,000 received from CERB. Now we've got $20,000 worth of taxable income, and taxes were only withheld on half of that. So there potentially is the consequence based on the fact that they had multiple sources of income and therefore they could be taxable. But if they only had the 10,000 a year, they're probably not going to pay tax because they'd be under that lower threshold.
Right. So it really depends on where your tax bracket falls. So I imagine if you've got, even commissioned salespeople that, maybe collected CERB for a couple of months, then they came back on board, made a ton of money, they should have either been reserving some of that money, or if they were an employee, I've had like a TD1 form filled out so that they were having additional taxes collected off of whatever income they have. So it's a typical multi-job situation where, my kid got surprised by that, a couple of years back and got stung. So now she knows, but it's it's the same situation. So it's kind of hard to say how much of every one of those CERB checks should have had what the deduction should have been, because it's really based on your overall income, right?
How many dollars did you earn in the whole year and how much was taken from whatever other sources before you can figure it out. But the saving grace on that is that if an individual figured it out now, RSPs are a great way to minimize that, because you can put money into an RSP and then that can minimize your tax liability because RSPs are a deduction. So there is some ways to minimize that potential burden if they're proactive between now and the end of February when the RSP deadline is.
Right. Okay. Good information. As a self-employed contractor, I've been in and out of work since April 2020. I've not collected any government funding, and I'm nervous that because of how much the wording was changing. Now that things are more consistent, am I able to claim funding for previous weeks not worked? Is there a timeline to be eligible?
You know what? I don't know the answer to that one off the top of my head. I know that with regards to the CERB itself, it was really confusing at the beginning because it was based on you had to have that, at least $5,000 work income in the previous year. And then the original rules were that the individual had to have been totally off work for a period of 2 weeks before they qualified for anything. And then that was changed as well. I would actually have to look up, quite honestly, whether or not that entire CERB program has been closed off at this point, because I don't know the answer to that question off the top of my head. My focus, of course, today, doing a lot of my research, was on the business programs as opposed to the CERB individual programs. So it's easy enough to do to just pop onto the CRA website and take a look at that. Or if the individual wanted to contact me directly, I can look that up for them.
So in that same scenario, if they're a contractor and they may be, talking about the wage subsidy that they may not have applied for their employees, is there a deadline on that on the business side?
Yeah, actually, and it's something that I'd forgotten to, well, it's not that I'd forgotten. When we videotaped, I had a certain agenda that I was working on, but I was going to mention live while we were on this today, is that there is a hard and fast deadline that is coming up. With that original CEWS program, the wage subsidy program, at the beginning, it was, the deadlines kept moving as they kept extending it, because as I mentioned, it was supposed to be a short-term program and it was supposed to be kind of over by now. So they kept shifting the deadlines, and now they've created a hard and fast deadline of January 31st. And that hard and fast deadline is for the first 5 periods. So that would have been what, April, May, June, July, until I think the 2nd of August period. But again, I can look that one up. So those first 5 are due, and that would be for 2 reasons. One of them would be the original submission. So if you have not applied yet, the original submission has to be in, but also for amended. And one of the issues with the way that there were so many changes with that program is that some people went ahead and applied for the program and found out later that they perhaps didn't meet all the rules, or they hadn't researched what the qualifications were, or, you know, there's 1,000 different things that could have gone wrong with those original submissions because it was so unclear. Mm-hmm. The deadline for doing an amended is also, for those first 5 periods, is also the end of January. So if anybody has put in a submission and they were thinking that, well, they just fix it later, later's here. And then after that, it would be during an audit, it's going to be just subject to audit after that. But the opportunity to fix it on your own without the heavy hand is the end of this month.
Yeah, I mean, here at the Chamber, Andy can, you know, speak to that as well. I mean, we've been very slow in the application process and making sure that we've got all of our you know, I's dotted, T's crossed, to make sure that we weren't making mistakes. You know,
yeah.
If you have a bit of cash flow, you're able to do that. But that hard deadline, you know, get it in, because otherwise you're gonna lose that opportunity, and that's good news. Is there a deadline on the next periods when they extend it, or is that going to be?
Then it becomes 6 months after. Yeah, it's 6 months after. Now that they've got deadlines, they're going to start flowing that it's a 6 month.
Gotcha. Okay, so that's good to know as well. So it's just one of those things you need to stay on top of and don't let it drag on.
Yeah, this program was amazing for a lot of people. So if you qualify, get them in.
Absolutely. I mean, you know, in a lot of cases, the only reason why businesses are still afloat is because of the CEWS. So definitely don't miss out, and you don't want to screw it up so that you know you're trying to pay back out of cash flow that you don't have. So another question in here: are you able to claim both CEBA loan and CERB? So I'm not sure. I would imagine that's somebody that's maybe a business owner.
Yeah, and that because each program is independent, I think. There's some interrelationship between some of the programs, but they are independent. So the CEBA loan, again, really super briefly, it was the original one was the $40,000 loan, and the original way you qualified for it was that you had more than $50,000 in payroll in the prior year. So those qualifications, they evolved, and then of course it became more robust as it went through the year. But that one is simply the bank loan, a repayable bank loan with that forgivable portion. So you could qualify for that. The CERB related more to not being able to earn income after the pandemic began. So right. I guess the easy answer is yes, you can qualify for both because both programs have nothing to do with each other.
Right. So you could be a business owner that would normally get paid out of the business proceeds rather than, say, like a shareholder loan. And as a result of the business being flat, you weren't able to get paid. So you would apply for the CEBA loan to take payment that way.
Well, the CEBA loan, it was really hard in this really short period to be able to explain the CEBA loan. But the CEBA loan was always launched to be covering non-deferrable expenses. So expenses that you were contractually obligated to pay over the year that you couldn't get out of. And again, that was intended to support those business expenses that you had, whereas the CERB and the CEWS were specific for payroll.
Right. Yeah.
Okay. And then just, if I can toss in just, again, there's a lot of information here that needs to get thrown out, but the interrelationship that I'd mentioned before with regards to the program is that, you know, if you had gotten the CEBA loan, and then you also got the CEWS that you received, you know, $10,000, $20,000 of CEWS, it has to be applied against your actual payroll costs to determine what the non-deferrable is. And that's another area that causes some confusion with individuals, but we're not going to see the ending reconciliation on that CEBA program until 2022.
Yeah, so it's one of those ones where it's kind of like a source deduction trust account where you don't want to be messing around, moving money around that should be allocated to a particular thing, right? You need to be very specific. Yeah. I would even suggest in some cases you'd set up separate bank accounts to keep track of that and keep everything separate from whatever your normal income would be. So you don't cross swords and pay out where you shouldn't be.
Well, the
I'm sure
original
you've got,
program was supposed to be that it was set up as a line of credit or a Visa. RBC, I think, is the only one that set it up that way. And it was
yeah,
intended to be, well, here's your 40. And here you could show specifically, I paid payroll costs, I paid my rent, I paid whatever. And you would be able to document it by the activity on that line of credit. But RBC is the only one that set it up that way. All the other banks just dumped the 40 into your bank account. It blended up with
yeah.
everything else. And now it's up to the individual business owners to be able to show that trail to the non-deferrable eligible expenses for that program.
Yeah, which is a good point. Yeah, we have RBC on another account that I manage for a nonprofit, and it's set up that way. It's much easier. You can see that nothing's been withdrawn from it at all. So, and it's not that case with TD. It's a lot more complicated. So,
Right.
Good point in there for sure. Are we getting? Oh, sorry, there's somebody asking. Yes, you're going to get some of the documents that she was mentioning. We'll make that available after the presentation. They were small on the presentation, so kind of hard to read, but we'll have that stuff be available for you. My spouse and I have both been working from home. Previously, it was just my home office we were claiming, but will we both be able to claim for home office expenses this year?
Actually, there is a CRA has created a new mechanism to be able to claim some work from home for all of the people that are out there that were forced to work at home this year because of the pandemic. And it doesn't sound like an awful lot, but there is a claim of up to $400 that is going to be a no mess, no fuss way to claim home office expenses. So in individuals that were working from home, it's a $2 per day. Again, no receipts, no documentation, no nothing required, except you've got to be able to sort how many days that you were at home. There's an option. You can either take the easy, no fuss method, or there's going to be the painful method, which is you need to have the form signed by your employer first, and then you've got to document all of your expenses. You've got to document the square footage of your home. You've got the same as anyone that has regular business use of home through a T2200 form that they would normally claim. That's the more painful method because you need all the receipts and the documentation and all the rest of it. Or there's the easy breezy $2 per day that is going to be in place for this year. I don't know if they'll do it again for next year. It depends on what happens with COVID next year, but this is available for the current tax season.
Okay. So two individuals working that are married, let's say working out of the same household, but for different entities, would claim individually?
Yeah, and normally CRA is so strict with home office expenses. It gets, like I said, it's kind of painful when you're doing the math, especially when there's two people working from home. But with this new program that they've come up with for the COVID program for business use of home, then both, if there's husband, wife, or spouses, or two individuals that are working in the same house, it's just the $2 per day, flat.
Yeah. Okay. That's
Not much
good
is
to know.
easy with taxes. That's going to be an easy one.
Okay. For the CEBA, what documentation would I need to prove that I spent the loan as required? If I find that I don't spend enough to meet the requirements, should I set extra aside to pay back? Or would I be better to invest in equipment or something else for my business?
Yeah, and that one is kind of like the big question, because there was so much confusion, as I said at the beginning, about what the funds were able to be used for. So we don't have a form yet that says how one is going to be able to claim that forgivable part. So without a form or without legislation or something for us to follow, all we can use is our best judgment and knowledge of this is how CRA works. So it has been stated that the funds are to be used for eligible non-deferrable expenses. And then there's a list. There's rent, there's property tax, there's insurance, there are communications contracts, there is a list, and everyone that took the CEBA loan got that list in with their documentation. So at this point, what we're advising for our clients is to simply keep a spreadsheet, maybe keep copies of those receipts, because we don't know if you're going to have to send in the original documentation that goes with each of those contracts. But if you've got the $40,000 loan, I'm just separating it out from the 60 for ease. But if you got the $40,000 loan, it is specific. It is to be used for eligible non-deferrable expenses according to that list. Document what you've used it for, and then what happens to the differential. It's very clear. The wording of this is on CRA's website in their frequently asked questions part. So if you receive 40, and then you only were able to come up with 30 perhaps in expenses, then that 10,000, it's still going to be repayable, and your forgivable part is based on the amount that you had for eligible expenses. So you're just not going to get as big a grant.
Okay, so I think that's a common misconception out there, that it was 10K that you could do. I'm just getting free 10K and, whatever, off we go.
Yeah. Yeah,
so,
we had clients that came to us and said, hey, my bank said just take the $40,000, stick it into a GIC, and then at the end of the period, pay back the 30, you make the interest, all is good. And that isn't going to work, because the rules of the program is it must be used for those eligible non-deferrable expenses. And one of the things that is on that question as well about investing in equipment, we've also had clients that have purchased equipment or purchased vehicles or purchased things with that money. And that's not on the list. That's not going to be an eligible expense to allow them to keep the $10,000. So one would hope that they've got other expenses that fit the list and still be able to qualify for the forgiveness portion.
Yeah, I think we can even do an entire webinar on that. I mean, nonprofits in a lot of cases were using that as a way of recovering after, if they lost revenue because they couldn't have events or whatever, that was a way of building recovery programs. And I'm not sure if that's on that expense list, because that may be something that's paid for in the future, not necessarily at the time of, because you're not spending money on something you can't operate. So
yeah,
it's
a pretty short list, really. It's not a huge list on what is eligible. So you just want to go back and look at what your expenses are, and keep in mind that the expenses are listed as eligible 2020 expenses. So they don't all have to be expenses that are after March 18th. They're for calendar year 2020. So. Oh,
so you could backdate prior to March.
It's calendar year 2020 for the forgiveness part.
Okay, all right. Well,
it's also, and there's rules with what dates were the contracts in place for, but it's basically what were you contractually obligated to pay as of that March, whatever date.
Gotcha. Okay, very good to know. And yeah, I hope that hopefully that doesn't catch a bunch of people, because that would just make this even worse. You know what? If it sounds too good to be true, it is. It's one of those things, right?
Yeah, absolutely. Just be careful. And the best advice is go back to your documentation for that CEBA loan. So there were two documents. One was the loan agreement. One was the attestation statement. And whatever you signed up for, because different banks at the beginning were on different pages and they had different requirements. But what I was meaning when I talked about the additional $20,000 is if you took the additional 20, it overrides that first 40. So if you qualified under some old rules and then you took the 20, you might have just shot yourself in the foot, because the new rules apply to that loan now. So just go back to that original loan agreement, read it, be familiar with what you are personally allowed to claim because of what you signed up for with your own bank.
Right. I mean, worst case is if you didn't spend any, you just give it back and you're done, right? So, I mean, that's the other option too. Yeah. Is that CEBA loan taxable?
The CEBA loan is not taxable, but the forgiveness part. So again, I'm going to go back to the 40 because a lot of people didn't get their extra 20 until they're getting them now. So of the 40, the $10,000 potential forgiveness part is included in income as in the year it's received. So you still have to include it in your income, even if in 2022 it's deemed that, oh gosh, I didn't qualify, I don't get to keep it. So in 2022 or whenever your year end, you might have a different fiscal year end. So whenever it's deemed that you're not going to get the forgiveness part, then you're allowed to deduct it. But you do have to include it in your income in the year received.
Right. So there's
a lot of people are losing money this year, so it's not going to be a huge consequence. But it's individual for each individual owner.
Okay, and just good to know for sure. And if you're not using Padgett, you should be speaking to your tax professional. Just make sure that you're not making a mistake in there. So we've got a question from Facebook Live, which, I'll throw it out there. I just want to make sure that we're fair to everyone. But, what's out there to help small businesses? I think that's a question that would take another, 2 webinars to answer. My suggestion is that you look at the documentation that Nancy is going to provide, but also, come to the Chamber website. There are, access points to the Ontario government. There's FedDev. There's lots of different things that are out there. A lot of them have changed, but to answer that question specifically here, I don't think is something that we can do with the time allotted. So not to give you a non-answer, but there's your non-answer. I understand that companies need to fill a new form out for workers to get access to this $400. Are they changing this again? Not sure what the $400 is.
I think that'll be the $400, the $2 per day for 200 days working from home. But I think what they may be asking, I'm not 100% sure, but I would like to suggest that there's a form T2200. So when employers are, they fill that form out for individuals who do need to claim home office expenses. Someone cannot claim them unless their employer fills out that form and completes it. But with this new special COVID home office expense, the beauty of it is they don't need to get their employer to sign off on that form. So,
right.
But if they're going to use, remember I mentioned there's like the easy breezy, just claim the $2 a day, or there's the harder way where you have all of your expenses and you do all of the allocations. If you want to do it the old, like that way, then you need that form signed by your employer.
Right, and that's for any non-repaid eligible business expense, right? So it could even be a car lease if that was required for you to be a part of business that you're paying on your own, is it not?
If you're talking about the regular business use of, or conditions of employment form, sorry, the T2200, that one would specify, if you need to use your own, if your employer specifies you need to use your own vehicle or you have to work at home or whatever. Yeah, you're correct on that.
Yeah.
But
So there's two different
your car isn't going to be part of the $2 per day one.
No, that's what I'm saying. There's 2 different forms, right? There's and I think I looked at it the other day. There's a separation. It explains. It's got an A on it or something like that. So there's a difference between the 2.
Yeah.
Another question, is a deferred cost considered an asset?
I'm not sure because that's 2 different things.
Yeah, sorry.
I'm not 100% sure what that question means.
There's nothing more in there other than that, so I guess we'll move on. I mean, an asset is different than a cost. I mean, so. Yeah, we're not going to answer that one, unfortunately. We'll have to come back. I own 3 companies. Am I able to claim the CEBA loan for each business? I think the answer to that is if you qualify for each of them, then you would be able to, and they would each stand on their own. But again, be aware of any other issues that you've got with not meeting the eligibility requirements.
Yeah, there are a lot, there are some dangers, for a lot of the programs with regard to that interrelationship between all the different programs as well. So there's some traps in there for sure.
Yeah, I think the general rule is if you have an entity that is taxable, it's, whatever happens to that entity is going to be taxed accordingly, whether that's a human or a business or a payroll, right?
Yeah, and we're not sure if the individual is talking about sole proprietorships or corporations or different ownerships. I mean, it's difficult. It's a fuzzy question without having, some
more specifics.
Yeah.
So we're 11:21. I've run out of questions that have come from the field. Was there anything that you felt you wanted to maybe add in there, make a bit more clarification, or anything else that you think is pertinent? We've got a few minutes left.
I think we kind of, it's like I said before, I mean, this is such a monstrous topic. And the problem is that things do change and the rules change and they're updated. So it has been an interesting exercise, interesting brain gym over the last year, just trying to keep up with all of the changes and how it best applies. Because the one similarity that seems to run through all the programs is that, it looks like they should be one size fits all, but they're not. And we're finding that we almost have to work with each individual client to determine what's going to work for them. because it isn't that, you know, my neighbor or my friend or the guy down the street took advantage of that program, because there are so many different rules that apply and change the eligibility for each program. So it's been quite the journey over the last year, keeping up with it.
Yeah, I mean, it's good that there is you know, that you're professional and that you're staying on top of it. I'm sure that your customers, your clients are quite happy that you're this well informed with it. Did have another question pop up, so I'll pop that up too, and then we'll see how much we have time for. So my employer laid me off in March, then put me back on payroll and has been paying 75% of my wage. Still at home, not working. Has this been filed incorrectly? Who will be responsible to pay back anything, myself or the company?
I'm not sure what payback means, but that one, there's a lot of elements that are in that particular question, because like you'd have to maybe go look at the employment contract to start with. I mean, I don't know if the employer is required to keep the person at 100% of their wage. If they're on 75%, I mean, the original program, that furlough program I mentioned earlier, that was, you know, employers were encouraged to keep, if they're going to furlough, have someone work at home and still get paid. They were encouraged to keep the individual at full pay, but they weren't required to. And then there was that subsidy that was up to 75%, depending on maximums that were capped in the program. That was available as well. But it was never mandatory that the employer has to keep paying at that rate. So I'm not sure if that's what the person is asking, but I mean, they have to go back and look at their employment contract perhaps to see what was in there, whether or not they're entitled to being paid back anything or not. I mean, I wouldn't be able to speak to that.
Yeah, I think that just speaks to regular, you know, payroll and income as the individual. You're getting 75% of your wage. You're going to be taxed on whatever amount you were paid. Yeah. You know, the company is going to pay source deductions on whatever it is they paid, and if they screwed up the calculation, that's going to be on them, not on you. It's not like they can claw it back because they made a mistake. If they applied for it incorrectly and made a mistake and didn't adjust it, then that's going to be on their shoulders. I would imagine. You know, the onus on this in a lot of cases is more on the business to make the right decisions, not the employee, you know, fortunately, which is good.
Right. And a lot of employers are just scrambling as well to try and figure out how to keep their businesses afloat, because it is a big old juggling act right now.
Yeah.
You know?
Yeah. You know, and one of those ones that you don't want to drop too many balls, otherwise you're gonna wind up being in a real problem. So, all right. Well, that was great. I don't know. You're in accounting, so you love numbers. I enjoyed that, actually, to be honest with you. It was nice to get some clarity on some of those questions, because it is a bit scary at the moment. So I'm gonna close this up now. So I want to thank you again for joining us today, and also for the work that everyone's doing in their businesses every day. These last few weeks have been kind of interesting, coming out of Christmas and the holidays. All the different changes going right into this lockdown, which is sort of complicating things. Kids kids in school at home and stressing out parents that are not teachers, and again, it's tough times, and I think we need to stay positive as best we can and ask for help and make sure that we're staying engaged. It's the only way to get through this. Continue to shop local, support your neighbors and family and friends with your intentional purchasing choices, especially during the lockdown. Stay safe, stay home. If you can avoid going out, then please do so. We are stronger together, but we're also stronger once we get out of this. So everything that people can do to help is going to be one step into getting us closer to back to normalcy. So Chamber's here to help you through this. Please feel free to email or call us if you need something more. We've got a few upcoming activities on Tuesday, January 12th. We're going to do team check-ins, so how to recognize signs of distress in your staff, what you can not ask, how to address issues, and why taking a proactive approach can help your business. On January 13th, we get back to our Chamber Chat networking sessions, which have been good. We've got a few adjustments with those that should be some interesting, and we're looking forward to seeing everybody after the holidays. And then on January 13th at 10:30 p.m. So we've got those mixed up. We got the dates mixed up. On a Thursday in January, and we'll clarify what exact date that is. We have social media with TKL Media. So learn the most important parts of social media and why online communities are the future of business. That one's going to be fun. These are the ladies from This Kind of Life, and they are absolute characters, a blast, and they make social media a lot of fun, and it should be a pretty engaging webinar. So look forward to seeing you at all of those, and hopefully we can get that January date cleared up. Oh, it's the 14th for the TKL, so it's the very next day at 10:30. So thanks very much for that, Julie. I appreciate it. Having said that, I think I will close it off. Everybody have a great afternoon and a great rest of the week, and we hope to see you at our next event. Thanks.
Thank you.